Welcome back to another video. Today we're going to go through how you could make $100,000 and still qualify for a stimulus check. So if we've been paying attention to the news, we saw that the cutoff for a stimulus check is $80,000 and then it phases all the way out until you get down to the full stimulus check at $75,000. But if you made up to $100,500, you could still qualify for a stimulus check, the full amount, if you contribute to your retirement accounts. So this is going to depend on whether you actually have a retirement account to contribute to, whether you're self-employed. These will all be factors to consider. So assuming that you have a 401k that is traditional that you can contribute to, if you put in the full amount, that'll take you down by $19,500 in 2021. If you contribute the full amount to a traditional IRA, that'll take you down by another $6,000. So that could take your taxable income from $100,500 down to $75,000. So if you were in that scenario, you could potentially qualify for a full stimulus check on the back taxes when you go to file your taxes for 2021. So the reason why I say that is because this year, on this year's taxes, I was able to file, and because I put so much into my traditional 401k last year, I qualified for a bigger stimulus check than what I got the year before. The year before, I wasn't putting into my traditional 401k because I was trying to pay off debt back in 2019. However, this year I maxed it out. So when I got done putting in to my traditional 401k, my taxable income was low enough to qualify for back pay on the stimulus check. So applying that same logic to next year, you could potentially get money back on your stimulus check if you decide to contribute to a traditional this year rather than a Roth. Those contributions to a traditional are going to have to be paid in the form of taxes on the back end. However, you will see some money from the government on the front end. So you'll have to make that cost benefit analysis yourself, and you'll have to look into that yourself. However, I just wanted to put the information out there, let you guys know what I'm doing. This is never financial advice. I'm just trying to let you guys know what I'm doing. On the self-employed side, you could go and try to start a SEP IRA, try to do some type of traditional plan, something that's going to help you reduce your taxable income. There's other ways to reduce your taxable income within business, as far as like actual expenses, business expenses, things of that nature. However, that will be up to your tax professional. And anyways, hopefully you guys got some value out of this. I hope that you guys are getting whatever you can out of this situation. You guys are thriving out there, and I'll see you guys in the next video. Make sure you hit the links down below. Peace.